the RBI has gone ahead and lifted restrictions on the bank, and now the bank can enroll clients both online also and issue fresh credit cards. The bank initiating remedial issues to address the supervisory concerns that were raised. Also, compliances have been submitted to the RBI. The restrictions, of course, put in place in April of last year. And to put the impact of this down, let's connect with Rahul Malani, research analyst at Mirae Asset Sharekhan. Great to have you with us on the phone line, Rahul. Tell us, what do you see as the immediate impact of the RBI lifting these restrictions on Kotak Mahindra Bank? Is there a boost you see in customer acquisitions, credit card growth?
So, firstly, good evening. So, overall outcome is a positive news for the bank, as it will help to improve the core operating performance. Three key factors which will drive the incremental key operating performance due to this news is that business growth will gradually improve and market share gains will be reflected in the loan growth as well as deposit growth. Secondly, as the environment becomes conducive for the growth of unsecured loans going forward in next 2 quarters, it will help to strengthen the margins, because credit cards is a something product which has higher yields, and going into the lower interest rate cycle, it will partially support NIMs versus the peers which will report lower NIMs in the cycle. Thirdly, it will boost the fee income. So all in all, this is a positive outcome on the operating front, which will be reflected in the which will be start reflecting from H1 FY26.
RBI imposed these restrictions over certain lapses. This decision now to raise the restrictions, does it mean that Kotak has fully addressed its compliance and governance concerns that the RBI had raised?
So basically, you get restrictions are lifted once the RBI is satisfied with the external audits and the outcomes which they have taken after resolution of all the internal compliances as well as the IT systems. So once it would have completed, then only RBI has lifted the restrictions.
So now with those restrictions gone, Rahul, how does Kotak stack up against peers in the private banking universe? You see an aggressive push now by the bank for market share?
So that is what I reiterated. I mentioned that it will continue to, it will outperform peers in terms of operating performance, because now it has lever in terms of accelerating the loan growth as well as deposit growth. Secondly, it has cushion on the margin front led by a higher share of unsecured loans. Plus, it will help to increase the fee income, which we have seen in the last 2 quarters, 2 to 3 quarters. Fee income has been muted. So overall, this will boost the operating performance for the bank.
Yes, you did mention that, but I was wondering if in case you see more of a, rush to really bite for the kind of time that they have lost with these restrictions having been put by the RBI. But tell us about the stock as well, Rahul. What's the short-term reaction that you see?
Basically, we should see a positive reaction on the stock on the back of the outcomes, because overall we were penciling around 5 to 10 basis points ROA compression in FY26, but this outcome would lead to around stable ROAs at least for the FY26.
Think a re-rating for the bank is likely now?
So basically, if you look at the results of the last quarter, the bank had already outperformed the peers in most of the key metrics. And we believe that re-rating trajectory would gradually happen as and when the overall outlook on the macro environment improves, as well as stress gets finished out in the unsecured segment.
Rahul Malani, many thanks for joining us on Kotak Mahindra Bank. Now that restrictions have been lifted by the RBI, we'll keep watching the stock and indeed how the bank does in playing catch-up as well for all the lost time during the restrictions. Meanwhile, we're watching what data has come through on the inflation front in the US. Their inflation has risen 3% in January compared to the estimate of 2.9%. This is a year-on-year comparison. The core CPI in the US, which excludes food and fuel prices, has come in at 3.3%, which is more than the estimated 3.1%. And that data on inflation makes investors shift those rate cut expectations to December from what was thought of as September. But looking at how Wall Street is reacting, well, the Dow has dropped more than 400 points after that hotter than expected inflation report has come in. We're seeing a percentage point cut on the Dow as we speak. It's now trading around the 44,144 levels. And NASDAQ is taking a knock of close to a percentage point, 0.8 down. It's trading at 19,484 levels, and the S&P also is taking a knock of close to a percentage point as well, 6,016 levels now. We'll keep tracking Wall Street, but US President Donald Trump has written on social media that interest rates should be reduced. And further, he said that lowering interest rates would work in tandem with the upcoming tariff policies, half of which have already been levied and the rest are underway. This comes a day after the Fed chair, Jerome Powell, has said that policymakers do not need to be in a hurry to lower rates as they watch the progress in inflation. And now we're seeing the inflation print as well. So on the back of that, the kind of pressure that's building on Wall Street, quite understandable. We'll take a quick break. On the other side, we'll talk about what can be expected of